Companies that adopt real-time cost tracking and digital forecasting improve profitability by 15 to 25%. That's a McKinsey number. Not 1 or 2% improvement on the margins, but 15 to 25%. On the same revenue, the same jobs, with the same crew. The only thing that changes is visibility into what's happening on those jobs as it's happening, rather than finding out what happened after it's already done and the money is already gone. Today, I'm going to show you how exactly to get there, step by step, no technical background required. I'm going to walk through the 5 data inputs that make AI job costing work, describe a complete dashboard walkthrough in enough detail that, well, you'll know exactly what you're looking at the first time you open one, and cover the billing readiness checklist that catches the things that fall through the cracks before they become permanent lost revenue. If you can read a P&L, and if you're running a contracting business, you can do everything I'm about to describe. So let's get into it. Welcome back to AI on the Job. I'm Tyler Janelle, Chief Operating Officer at JobDocs and Vice President of Revenue at Mr. Restore. Today is a tutorial episode, and I want to be clear about what that means before we start. This is not a conceptual episode about why AI job costing matters. We've covered the why in the first 3 episodes: the underbilling leaks, the cash flow problems, the visibility gaps. Today is the how, practical, specific. Step by step, by the end of this episode, you should be able to explain AI job costing to your project manager, understand exactly what data you need to make it work, and have a clear mental picture of what you're looking at when you open the dashboard for the very first time. I also want to acknowledge something directly at the top. I know a lot of people listening to this have tried software before and it didn't go the way it was supposed to. You watched a demo that looked impressive. You signed up, you spent 3 or 4 weeks trying to get your team to use it, and eventually it just became another tab that nobody opened. That experience is so common in this industry that I'd be surprised if it hasn't happened to most of you listening to the show right now. So I want to address the tech skeptic head on throughout this episode, not by pretending the barrier doesn't exist, but by being precise about where the barrier actually is and how to get through it. Here's the thing I found. The barrier to AI job costing is almost never technical. It's not that the software is hard to understand or operate. It's that most implementations start in the wrong place. They start with the software and then try to build the data discipline around it, when it should be the other way around. The discipline comes first. The software amplifies the discipline. Today, I'm going to walk you through exactly what that looks like in the right sequence. 3 things today. First, what AI job costing actually is, and just as importantly, what it isn't. Second, the 5 specific data inputs the system needs to do its job and exactly how to get each one into the system. Third, a complete verbal walkthrough of what AI job costing looks like in practice, what the dashboard contains, what the flags mean, and what you do when something gets flagged. I'm going to describe it clearly enough that you'll have an accurate mental model of the whole system before you ever sit down at a screen. And if you want to see it for yourself after this, head to job-docs.ai for a free trial. Let's start with the most important reframe. Real quick though, if you're getting value from the show, the best thing you can do is follow us wherever you're listening. Apple Podcasts, Spotify, YouTube, and leave a review if you're on Apple. It takes maybe 30 seconds and it helps other contractors find the show. And if you know someone running a restoration, HVAC, plumbing, or field service business who needs to hear this, share it with them. That's how we grow this channel, and that's how more contractors get the information they need to stop leaving money on the table. New episodes every Wednesday. Find us wherever you listen to podcasts. Traditional job costing, the kind most contractors do, whether in a spreadsheet or a basic accounting system like QuickBooks, works like a map. At the end of a job or at the end of a month, you look back at what happened. You add up what the job cost, you compare it to what you billed, you calculate your margin. And if the margin was bad, you know. The problem is, you know, after the fact, after the job is closed, after the invoice was sent, after the decisions that led to the margin problem were already made and paid for. The map shows you where you've been. It is, by design, a retrospective tool. AI job costing works like a GPS. It's not looking back, it's looking at where you are right now, comparing that to where you plan to be, calculating where you're headed if the current trend continues, and speaking up when you're about to take a wrong turn, well before you've taken it. Well, there's still time to make a different decision. That's the entire conceptual shift. Everything else, the 5 inputs, the dashboard, the alerts, is just the mechanics of how the GPS works. But the fundamental change is the direction of the information, backward versus forward. Historical versus predictive. Post-mortem versus early warning. Let me make this concrete with an example. You have a water damage job, 14,000 estimated scope, crew on site for an estimated 8 days. With traditional job costing, you find out on day 12 when the job closes that the crew took 11 days instead of 8. Labor ran 2,100 over estimate, and your margin on the job was 9% instead of the 24% you priced it at. That's the map. That information is accurate. It is completely useless for improving the outcome on that specific job because the job is already done. The only thing it's useful for is estimating future costs, or future jobs rather. And most contractors' estimating process doesn't actually feed back from job cost data in a systematic way. So even that value often doesn't materialize. With AI on a job costing, you find out on day 6 that labor hours for days 1 through 6 are trending 34% above the estimate for that phase. The system flags it, you get the alert that morning. Now you have options. You can go look at what happened. Maybe there was additional work that warrants a change order, in which case you document the change order now while the job is still active and the client is engaged, rather than trying to retroactively justify an unexpected invoice. Or maybe the crew hit an unexpected complication that's now been resolved and the second half of the job will come in fine. Or maybe there's a productivity issue you need to address directly. You don't know which until you look, but you know to look on day 6 while you can still do something about it, rather than on day 12 when all you can do is accept the margin hit and move on. That's the entire value proposition of AI job costing. It moves the intervention point from after the fact to in the moment. Everything else is implementation detail. Now, let me be equally clear about what AI job costing is not, because I think misunderstanding this causes people to either expect too much or dismiss it unfairly. AI job costing is not a replacement for your estimating judgment. It doesn't know whether your estimate was right in the first place. It only knows how actual costs are tracking against whatever estimate you put in the system. If your estimate was systematically wrong for a particular job, the AI will flag every job of that type as over budget. And the right response is to fix your estimating process, not to adjust the alert threshold. The system is a mirror for your estimates, not a validator of them. AI job costing is not a substitute for crew management. When the system flags that labor hours are running high on a specific job, that flag is the beginning of a conversation, not the end of one. You still have to call the crew lead, understand what's happening, and make a judgment call about whether the response is a change order, a productivity conversation, or simply accepting that this job has a complication that the estimate didn't capture. The AI surfaces the information. The management is still yours. And critically, for the tech skeptics, AI job costing does not require you to understand how it works under the hood. You don't need to understand the algorithm. You don't need to understand how the system calculates a labor trend or projects a cost overrun. You need to understand what it tells you and what to do about it. You don't understand how GPS calculates the optimal route accounting for traffic and road conditions and turn restrictions. You just turn left when it says to turn left. The same principle applies here. Understand the output. Act on it. The mechanism is the software's job, not yours. For AI job costing to give you accurate, actionable information, it needs 5 categories of data. Not 10, not 20, 5. And here's what I want you to do as I walk through each one. Think about where that data currently lives in your operation. Is it in your head, on a spreadsheet, in a text thread, in your accounting software, but not connected to your job management platform? Because the implementation question for every contractor is not, how do I get this data? You already have it. The question is, how do I get this data into one system that can compare all 5 categories simultaneously in real time? That's the entire implementation challenge. So let's walk through them. Input 1, your estimate. The baseline everything else gets measured against. Every job starts with an estimate. Labor hours broken out by phase or crew role. Materials, line items, not a lump sum. Equipment, what's going in, for how long. Subcontractor costs, what each sub is contracted for. The AI uses this estimate as the benchmark against which everything else gets compared. This is the fixed point. Every actual cost that comes in gets measured against the corresponding line item in the estimate. Most restoration contractors are estimating in one of 3 ways: Xactimate, a custom spreadsheet, or a combination of both. All 3 can feed into an AI job costing system, but the level of granularity matters enormously. A lump sum estimate, $14,000 for water damage remediation, gives the system very little to work with. It can tell you that total costs are trending toward or above $14,000, but it can't tell you whether the problem is labor, materials, equipment, subcontractor costs. Line item estimate, labor at 4,200 for 60 hours across 2 phases, materials at 3,800, equipment at 1,400, buying subcontractor at 2,100, overhead, margin, gives the system 5 separate cost categories to track, flag, and report independently. The more granular the estimate, the more precise the early warning. If you're using Xactimate, the line item detail is already there. The question is whether your job management system can import it. If you're estimating in a spreadsheet, getting that data into the system is a manual entry step that really should happen when the job is created, not after. The discipline of entering the estimate at job creation is what makes everything else in AI job costing work. Without the baseline, the GPS has no destination to navigate toward. One practical note here: don't let perfect be the enemy of good on this. If your estimate is at the job type level rather than perfectly line itemized, if you know from experience that a residential water damage job of this size and scope typically breaks down roughly as 40% labor, 30% materials, 15% equipment, and 15% subcontractor, for that breakdown as your starting estimate. It's not perfect, but it gives the system enough to flag when one category is running significantly above pattern. You can refine the estimating discipline over time. Start with what you have. Input number 2, labor costs, job-specific time tracking. Crews logging time by job, not just clocking in and out generally, but attributing hours to a specific job record. This is the input that generates the most pushback. And I want to address that pushback directly because I hear a version of the same objection constantly. My guys won't track time, or they'll just put in whatever number looks right, or I've tried this before and it lasts 2 weeks before everyone stops doing it. All of those objections are real. They come from real experiences with time tracking systems that were too complicated, too slow, and too disconnected from the actual work to sustain as a habit. The best mobile implementations today work like this. Crew member opens up the app on their phone. Their active job is already displayed as the default because the system knows where they're scheduled. They tap to log start time or enter hours. They're done. 30 seconds. The job number is pre-populated. The phase is pre-populated based on where the job is in the sequence. The only thing the crew member has to do is confirm and submit. That's materially different from asking someone to remember a job number, open a timesheet, find the right field, enter hours, categorize the work, and submit, which is what most of the failed time tracking implementations I've seen actually looked like. The 30-second mobile entry with the job pre-populated is achievable as a sustained habit. The 5-step manual process is not. If your crew isn't tracking time, look at the friction first before concluding that they won't track. And here's the direct answer to my guys will just put in whatever number looks right. If they're entering roughly accurate numbers, that's useful. If they're entering numbers that are systematically off, always rounding down, always putting in the minimum, the AI job costing system will actually surface that pattern. You'll see it in the consistently low labor cost entries for certain crew members or certain job types, followed by jobs that close with margin much lower than the labor entry suggested. That inconsistency is itself information. The system can't force honesty, but it can make dishonesty visible in ways that manual tracking just can't. The bottom line on input 2: if you don't know what a job costs in labor hours, you're estimating your margin rather than knowing it. Every percentage point of margin you think you have on that job is a belief, not a fact. AI job costing turns the belief into a fact, but only if the labor data actually going in is correct. Input 3, materials and equipment, tied to specific jobs, not overhead. Every material purchase, every equipment deployment, every supply pulled from the van, tied to a specific job record rather than logged to general overhead. We covered the untracked materials leak in episode 2, so I won't repeat the full analysis here, but I want to make the implementation point specifically, because this input has a workflow challenge that's slightly different from the others. Labor tracking happens at the end of a shift. There's a natural moment where the crew is wrapping up and can log time. Material tracking is more distributed and harder to time consistently. Equipment gets pulled from the yard in the morning before anyone's thinking about logging. Supplies get picked up at a supply house mid-job. Materials come out of the vans running inventory without a discrete purchase event. The logging moments are scattered across the workday and often don't have a natural pause point where someone's going to stop and open an app. The implementations that solve this best use one of 2 approaches. First, the job creation approach, where materials are pre-logged at job creation based on the estimate. Instead of logging materials as they're used, the estimate becomes the materials record. And exceptions, things used beyond the estimate, things returned, get updated. This works well for jobs with predictable material lists and less well for jobs where the scope is uncertain at the start. Second, the end of day reconciliation approach, where the crew lead reviews materials used during a brief daily closeout in the system, 5 minutes at the end of the day, updating what was used and what needs to be ordered. This is more accurate, but requires the habit. For equipment specifically, the most effective approach is a check in, check out log tied to the job record. Equipment leaves the yard, it gets logged to a job. Equipment moves from job 14 to job 22, well, that transfer gets logged. Equipment comes back to the yard, that return gets logged. The log serves both the billing function and the equipment tracking function, which gives crews a reason to do it beyond the back office benefit. If you can connect equipment accountability, where is Unit 7 right now, to the same logging habits that feed the job cost data, adoption rates go up significantly. Input 4, subcontractor costs, committed before paid. This is one of the most underappreciated inputs in AI job costing, and it solves a problem that makes job cost reports actively misleading in operations that rely heavily on subcontractors. Here's the problem. You hire a demo sub on day 1. They do 3 days of work. Their invoice arrives on day 10. You pay on day 17. In a traditional cost tracking system, the cost shows up on day 17 when you process the payment, but the cost was incurred on day 1 through 3. Your job cost report for days 1 through 9 shows that job as significantly under the actual cost because the sub's cost isn't visible yet. The job looks fine on paper, but it isn't. Committed cost tracking changes this. When you hire the sub, you enter their contract amount, what you've agreed to pay them for the defined scope, into the system as a committed cost. The system immediately treats it as a cost against the job budget, even though no invoice has arrived and no payment has gone out. The job cost report on day 1 accurately reflects the financial commitment you've made. The budget tracking doesn't have a blind spot where sub costs are invisible until the check clears. This matters even more when you're managing multiple subcontractors on a larger job. On a $200,000 reconstruction project with a concrete sub, a framing sub, an electrical sub, and a finished carpentry sub, all hired in the first 2 weeks, the gap between committed cost and paid cost can easily be 60 to 80,000 at any point during the project. A job cost report that only shows paid costs is going to consistently show that job as healthier than it actually is, right up until the invoices start arriving. Committed cost tracking closes that gap from day 1. The implementation habit here is straightforward. When you execute a subcontract or receive a sub's bid and decide to proceed, that's the moment to enter the committed cost into the system. The trigger is the hiring decision, not the invoice receipt. If you can build the habit of logging subcontracts at execution, same moment you sign or approve, the committed cost tracking works automatically from there. Input 5, change orders, everyone with a status. The last input is the one I'd argue has the single highest ROI of the 5. Not because it's the most complex, but because of how directly it connects to the billing link that we covered in episode 2. Every change order in the system with a current status, requested, approved, or invoiced. That's it. 3 statuses, 1 data field, but that data field tracked consistently is what makes the billing gate work. The check that prevents an invoice from being finalized while there are unresolved change orders sitting in requested status. Let me walk through the life of a change order in a system that tracks this properly. Crew lead discovers additional moisture behind the wall. Scope has expanded beyond the estimate. They flag it in the system. Change order requested, $1,200. Description of the additional work and location. Status requested. The system notes the date it was flagged. The project manager gets a notification. The client conversation happens. The client approves. The status updates. Approved. That approval gets documented digitally with a timestamp, ideally with the client's name on it. Work proceeds. Job moves toward billing. Status updates. Invoiced. The billing cycle captures the change order. Money goes to the invoice where it belongs. Now, here's what happens if the change order sits in requested status for 6 days without moving to approved. The system flags it. Not at invoicing time, but at day 6. Change order on job 19 has been in requested status for 6 days. Recommend following up before invoicing. You get that alert on day 6. You follow up, you get the approval, the change order moves to invoiced. You captured the revenue. Compare that to the alternative. The change order sits in requested status. The job closes, invoicing happens, and nobody notices that the $1,200 change order, well, it never made it to the invoice. That's the leak. That's the pattern that costs the average restoration contractor tens of thousands of dollars every single year. The single status field, tracked consistently with an automated aging alert, closes it. The implementation here is about creating the habit of logging change orders at the moment the scope is changed and identified. Not later, not at billing time, but in the field when the discovery happens. The crew lead who finds the additional moisture logs the change order before moving on to the next task. The PM who gets the call from a client requesting additional work creates the change order record before hanging up. The trigger is the discovery, not the documentation window at the end of the week. When that habit is in place, the system does the rest. I want to walk you through what this actually looks like in practice. I'm doing this verbally on purpose. A lot of people listening to this are in a truck, on a job site, or somewhere they can't watch a screen. I want those people to walk away with the same understanding as someone who sat through a live demo. So here's how it works. Describe the way I'd describe it to a contractor I'm talking to on the phone. Start with what I'd call the main view, the portfolio view. Imagine a single page that lists every active job in your operation. Let's say that's 14 jobs, which is a normal active load for the size of operation we've been talking about through the first few episodes. And here's the first thing I want you to understand about this view. It's not just a list. It's a health view. Every single job has a color-coded status indicator next to it. Some are green, some are yellow, one or two might be red, and from that color alone, at a glance, in about 3 seconds, you already know which jobs need your attention today and which ones don't. That's the first thing that changes when you move from a spreadsheet to an AI platform. The information comes to you, organized by urgency, rather than you hunting through rows and columns to piece it together yourself. Green means this job is tracking on budget. Milestones are being hit on schedule, no flags pending. These are the jobs I don't need to think about today. I can trust they're running correctly and direct my attention elsewhere. Yellow means watch this one. Something is trending in a direction that warrants a look. Not an emergency, but a flag that needs my attention before it becomes one. Red means something needs my attention today. There's a problem that's already crossing a threshold where intervention is urgent. Most contractors don't have this kind of view. What they have is a list of jobs, the name, the client, the address, the estimated completion date. And that's useful for knowing what jobs exist, but not useful for knowing which jobs need your attention today. The health view changes your morning. Instead of making 4 phone calls to figure out what's happening across your active jobs, you spend 2 minutes with the dashboard. Green jobs, no calls needed. Yellow jobs, targeted follow-up on the specific issue. Red jobs, those are your first calls of the day. The information comes to you rather than you hunting. Now, let me take you into one of those yellow jobs so you can understand what watch this one actually means in concrete terms. Imagine a water damage residential job, 15,000 estimated scope, been active for 11 days. At the top of the job record, you'd find the budget status summary. 2 numbers, estimated total cost of completion and actual cost logged to date. In this case, estimated at 1,200. Actual log so far at 4,800. On the surface, that looks fine. Not even halfway through the budget with 11 days in. But right below that budget summary is the AI flag, and this is where the system earns its value. The flag reads, labor hours trending 34% above estimate for days 1 through 11. At current rate, total labor costs will exceed budget by 2,100 at completion. That's the early warning. The job is not over budget today. But the trajectory of labor hours over the first 11 days extrapolated to completion puts it 2,100 over on labor alone. The system calculated that pattern automatically, without you asking. It's telling you to look at this now while you can still do something about it, rather than in 9 days when the job closes and you're reading the post-mortem. Now, here's the important part, and this is where I want to emphasize the judgment piece. The flag doesn't tell you what to do. It tells you something warrants investigation. There are multiple possible explanations for this labor trend, and the right response depends on which one is true. Maybe the crew found additional moisture behind the wall that wasn't in the original estimate. The scope is genuinely expanded. There's a legitimate change order here. The higher labor hours are actually correct for the expanded scope. In that case, the right move is to document the change order now, before billing, and the flag resolves because the estimate gets updated to reflect the real scope. Maybe the job hit a complication in days 1 through 5, and that's now resolved. And the second half of the job is going to run efficiently, and the final number will come in just fine. Well, in that case, the right move might be to note it in the job record and keep monitoring without taking action. Or maybe there's a productivity issue that needs a direct conversation with the crew lead. The AI doesn't know which of those is true. You do, once you make the call and find out. But without the flag, you don't know how to make the call on day 11. You find out on day 20 when the job closes and the labor variance is already permanent. That's the entire value of the early warning. It moves the conversation from after the fact to while there's still time. Now, let me take you to the change order section on that same job. 2 change orders. First one, $800 approved and invoiced. That's the clean path. Scope change identified, documented, client approved, billing updated. That change order will make it to the invoice. Second one, $1,400 in requested status, and right next to it, a flag. This change order has been in requested status for 6 days. Follow up recommended before invoicing. 6 days in requested status. Here's why that flag matters. This job is getting close to billing. If the invoice goes out and this change order is still sitting in requested status, the client hasn't formally approved it. It hasn't added to the invoice scope. There are 2 bad outcomes. I invoice without it, and $1,400 of work never gets billed. Or I try to add it retroactively, and after the main invoice has already been sent, and now I have a much harder conversation with the client about unexpected additional charges. The flag on day 6 gives me time to have the right conversation. Call the client, confirm the additional scope, get the approval in writing, and update the change order status to approved, making sure it makes it to the invoice. That 10-minute phone call triggered by a 6-day aging alert captures 1,400 otherwise have leaked. Multiply that by the number of change orders that age past their billing window across a full year's worth of jobs, and well, you're looking at the change order leak from episode 2. $16,000 to $20,000 annually, getting closed down to a fraction. Last piece on this job, the billing readiness check. This runs automatically before you can finalize an invoice. It's the system's last pass to make sure nothing is getting left behind. On this specific billing job, the readiness check is flagging 3 things. First, the unresolved change order we just described, still in requested status. The billing readiness check will not let you finalize the invoice until that change order has a resolved status. Either it gets approved and added to the invoice, or it gets explicitly declined and documented as such. But it can't just sit there while the invoice goes out. That gate by itself closes the most common version of the change order leak. Second, 3 material line items that are showing as overhead costs but have dates and accrue assignment that match this job's active period. The system is surfacing these as candidate costs that might belong on this job rather than in overhead. They're not confirmed because the system doesn't know for certain whether these materials were used on this job or on something else. You look at the 3 items, confirm that 2 of them were used on this job and 1 was for the shop, update the 2 job-specific ones to this job record, and they get added to the invoice. 2 items captured what would have been missed, not because anyone noticed, but because the system flagged them for review. Third, a subcontractor invoice that's been paid but isn't reflected in the job cost summary. This happens when a payment goes through accounting before the corresponding committed cost entry in the job management system gets updated to reflect the payment. A billing readiness check catches the discrepancy. The check was written, but the job record doesn't show it as a reconciled cost. It's a data hygiene flag more than a billing flag, but it matters for the accuracy of the final job cost summary and for making sure the cost to invoice reconciliation is clean. Those 3 things get fixed. The invoice goes out, this job bills for everything that was actually done, including the $1,400 change order and the 2 material items that would have hit overhead. That's what the dashboard looks like in practice. That's what the flags are for. And if you want to see it for yourself rather than just hear me describe it, which I'd encourage, you can start a free trial at trial.job-docs.com or go to job-docs. The description should make a lot more sense once you're looking at the real thing. Okay, so before I give you the getting started plan, I want to spend a few minutes on the objections I hear most often from contractors who are interested in AI job costing but haven't pulled the trigger. I want to address them directly, not dismiss them, because they're real objections that come from real experience. Objection 1. I've tried software before and my crew won't use it consistently. This is the most common objection, and it's almost always true. The crew didn't use the previous software consistently. What I push back on is the conclusion that the problem is the crew. In most failed implementations I've seen, the problem was friction. The software required too many steps. It required the crew to remember too many things and wasn't pre populated with the job context that would make logging fast. When the system knows where your crew is scheduled and pre populates the jobs on their mobile screen, the logging habit is dramatically easier to sustain. If you've tried software before and it failed, don't assume it'll fail again. Ask specifically why it failed and whether the new system addresses that specific friction point. Objection 2. My jobs are too variable to have a standard workflow. Every restoration contractor I've talked to says their jobs are variable. And they're right. Restoration is inherently variable. Hidden damage, scope changes, client decisions, insurance complications. But variable doesn't mean unpredictable. Within that variability, there are patterns. The typical water damage job of a certain size has a typical labor range, a typical material spend, a typical timeline. AI job costing doesn't require your jobs to be identical. It requires a baseline estimate that reflects your best prediction of the job at the outset. The system then tracks how reality diverges from that prediction and flags when the divergence is significant. The variability is exactly what makes the early warning valuable, not what makes it impossible. Objection 3. I don't have time to set this up properly. This is the objection I have the most sympathy for because it's usually honest. The contractors who tell me this are genuinely busy. They're running jobs, managing crews, handling client relationships, dealing with insurance carriers. They don't have blocks of unscheduled time to configure a software system. This is exactly why the onboarding model at JobDocs is structured the way it is. $1,000 white glove onboarding fee covers the entire JobDocs team configuring the system for your operation. Workflow templates, alert thresholds, input setup, crew training. You describe your job types, your typical workflows, your billing structure, and they build the configuration. You review it, you go live. The implementation effort on your end is measured in hours, not weeks. For contractors who've been burned by implementations that took months and never really worked, that model is the difference between trying again and not trying at all. Objection 4. I'll lose the things I know how to do in my current system. This is a real switching cost that I don't want to minimize. If you've been in the same system for 3 years, you know it. You know where things are. You've built workarounds for the things it doesn't do. Switching to something new means a period of relative inefficiency while you build the same familiarity in the new system. My honest recommendation, don't switch everything at once. Start by running a new job type through the AI job costing system in parallel with your current system. Compare what you get. Once you've done 10 jobs in the new system and understand how it works, the switching cost is much smaller and the ROI is much clearer. You don't have to commit to a full migration to prove to yourself that the AI job costing works. You just have to run one job through it. Okay, so the getting started plan. 3 steps, do these in order. Step 1, choose an industry-specific platform. A generic project management tool, even one with AI features in the marketing materials, is not AI job costing for a restoration operation. It doesn't know what a drying log is. It doesn't understand how Xactimate line items map to job cost categories. It doesn't have restoration-specific alert logic for the patterns that drive the underbilling leak. Generic tools will look good in a demo and perform below expectations in practice because they weren't built for your workflows. The platform you choose should be specifically built for restoration or field service by people who understand your billing cycle, your insurance relationships, and your job types. That specificity is what makes the alert logic actually useful rather than generic. Step 2, set up your 5 inputs. Start with just 2. Don't try to configure all 5 inputs in week 1. Start with input 1, your estimate, and input 2, job-specific labor tracking. Those 2 inputs alone change your visibility dramatically. You can tell whether labor is tracking to estimate on every active job in real time without any other data. That's already more than most contractors have. Add materials and equipment in week 3 or 4, once the labor tracking habit is established. Add committed costs for subcontractors once you run a few jobs with subs through the system and understand how the data flows. Add change order status tracking from the beginning. It's the simplest input and has the highest immediate ROI. Build from 2 inputs to 5 over 30 to 60 days. Don't overwhelm the implementation. Step 3, run your first job through it fully and investigate every flag. Pick one job. ideally your next new water damage residential job, your highest volume job type, and commit to running it through the system completely from estimate to final invoice. Every input logged, every flag investigated, every billing readiness item resolved before the invoice goes out. That first job is your proof of concept. The first flag the system generates, the first thing it catches that you would have missed, that's the moment the ROI becomes experiential rather than theoretical. I've heard from a lot of contractors that the first catch is always the most powerful moment inside their implementation because it's almost always something real. A change order that would have been missed, a labor overrun that would have closed before you saw it, a material cost that would have hit overhead. One job, one catch. That's all it takes to understand what you've been missing. If you want to skip the setup and have the system built for your operation entirely, JobDocs charges a flat $1,000 white glove onboarding fee to configure the whole thing. Workflow templates, alert thresholds, 5 input setups for your job types, crew training. For contractors who've tried and failed at software implementations before, removing the setup barrier is often the difference between actually going live and having another subscription that never gets used. Start your free trial at job-. Okay, so let me bring this together. AI job costing is not a technology skill. It's a visibility skill. The GPS versus the map. Instead of reading a post-mortem on every job after it's done, you're watching the trajectory in real time and responding while you still can. The 5 inputs, estimate, labor, materials, subcontractor committed costs, and change orders are data you already have somewhere. The question has always been whether it's in one system that can compare all 5 categories simultaneously in real time and alert you when something is heading in the wrong direction. The 15 to 25% profitability improvement from that McKinsey study isn't magic. It's the compounded result of catching budget problems early instead of late, capturing all the change order revenue instead of missing a significant portion of it, and having the visibility to make better decisions on every active job rather than flying behind or flying blind until the invoice. Same jobs, same crew, same revenue, just better information at the right time while it still matters. If today's episode painted a clear enough picture that you want to see the real thing, like I've mentioned before, head to job-docs.ai and start a free trial. The dashboard I described is exactly what you'll find, minus the configuration. Next episode, the 5 AI tools every restoration contractor should be using in 2026. We're building the full stack: documentation, respondents, lead capture, operations intelligence, and scheduling. Share this one with a contractor who's been skeptical about whether AI job costing is something they can actually do. I'm Tyler Janelle. This is AI on the Job, and I'll see you next Wednesday.